Do you own a home? You know, that owning a home is really a dream for many, but what if your home could be more than just a place to live? Imagine if it can become an asset that generates passive income and pays you. Some people, like Robert Kiyosaki and other financial gurus, they don't believe that a home is an asset. They believe it's a liability because you pay expenses on it. You pay your rent, your mortgage, your electricity, and so forth. But imagine if it could become an asset that generates passive income instead of costing you money. It is possible through a creative strategy called seller financing. So when we understand seller financing is known as owner financing. Basically, it occurs when a homeowner acts as a lender, providing financing to a buyer. Instead of receiving a lump sum at closing, the owner receives a sum, basically a down payment, just like a lender would, and then they receive regular payments over an agreed period of time. Typically, 30 years with a residential loan, 15 maybe. But it's paid with interest. So you're getting the amount of money that you would receive at closing, along with the interest that is accumulated over the period of the loan. Okay, so however long it takes the buyer to pay. But it generates ongoing cash flow. So by becoming the bank, you can transform your home into an asset that generates consistent cash flow for you. The monthly payments from the buyer serve as a steady stream of income, passive income, that can supplement your finances and potentially cover various expenses that you have on a daily basis. Okay, you can tailor the particular financing terms too, because unless state laws do have usury laws that come into play, so you have to be careful of those. But you can tailor the financing terms. You are also limited to the number of seller financing transactions that occur by federal law, but we can discuss those in a further video. One of the significant advantages of seller financing is the flexibility that it offers in structuring the terms. So you as a lender have the freedom to negotiate interest rates, repayment periods, and conditions to suit your financial goals. This customization allows you to maximize your returns while ensuring a mutually beneficial agreement between and relationship with you and the buyer. Okay. You'll also, as a seller, attract a larger pool of buyers. Seller financing significantly expands your pool of potential buyers. By offering financing options, you open the door to buyers who may not qualify for traditional bank loans due to credit challenges or other factors. This increased demand can speed up the selling process and potentially result in a higher sale price for you. So you won't have to lower your sale price. You can also mitigate your risk and maintain your collateral. When you enter a seller financing transaction, you do retain a vested interest in the property. Most likely, you are in first position on that loan. That means that if the buyer defaults, you have the option to reclaim the property and resell it. You can go through a foreclosure process, whatever is available in your state, or you could do a deed in lieu, meaning you can ask the buyer to sign over his interest in the property and return the property to you. That's a much simpler process, and it's much less costly. The key is, though, maintaining a good relationship with the buyer throughout the process. Okay, but that being able to obtain your property, or if it's sold at a foreclosure sale, recouping all of your money that has been lent on the property is very important, because at a foreclosure sale, you as the lender may or may not be the person to recoup the property, or you might not get it back. You would get paid at the foreclosure sale. But again, if you do a deed in lieu, you will get your property back from the buyer. Um, just make sure that you go through a attorney or title company to do so, so that you can actually make sure that there are no other liens or problems, any you know debts that have attached to the property by virtue of the buyer owning the property itself. But tax advantages for the seller through seller financing are very important too, because when you have various tax advantages, you know, uh, it's installment sales, so you're not receiving the full amount of the sale proceeds at closing. So now you are deferring the gain over a period of time. You will experience a lower tax situation for selling the property itself. So if you sold your property and you have $100,000 worth of gain in a property through a traditional sale, if you did seller financing, that the amount of gain that you would experience would be spread through the term of the loan. Okay. But consult with a tax professional in your area for that, because you are losing out on some benefits. Maybe if you rented the property, you would have depreciation, but with a sale, you're giving up that depreciation tax benefit. But again, check with a tax professional. Okay. Spreading out the capital gains on a sale can potentially over time reduce your tax liability. Also, you have potential for higher returns. So by financing a sale of your home, you have the potential to actually earn a higher rate of return. Not only may you be able to get full price for your property, but you can also, uh, the interest charged on the financing itself, in addition to the sale price, can significantly increase your overall profit. So becoming the bank through seller financing does allow you to transform your home into an asset that pays you. By offering seller financing, you generate passive income, you attract a broader pool of buyers, and you have the potential to achieve greater returns and reduce your tax burden in the short term. Okay. So it's a creative strategy that can unlock new financial opportunities for you and provide you with more control over the sale of your property. If you need more information, just make sure that you comment in the below or contact our office. Thanks.